Friday, July 21st, 2017, Maneco 64, home of alternative economics and contrarian views. So I like to talk about the US dollar, the euro, precious metals, and also something really important, in my opinion, that's driving currencies right now, and it's the US debt ceiling. It's something that is out there but hasn't really been focused on, mainly because of loads of distractions, especially to do with politics. There's an article late yesterday on Zero Hedge. It says GOP lawmakers blame Trump distraction for why they're getting nothing done. Fears debt ceiling debacle. So first of all, let's go back and look at the debt ceiling and what it is. Basically, U.S. Congress sets a ceiling where the national debt can be. And in the past, when we reach that level, Congress has been able just to agree to raise it. But since 2011, there's been a lot of difficulty raising the debt ceiling. And back in 2011, in the summer of 2011, there was a debt ceiling crisis. The rating of the U.S. Government was downgraded by S&P, and that was when gold actually traded to a high of 1921. We had the whole crisis. People were concerned that the U.S. government would default because Congress couldn't agree on raising the ceiling. But what they've done in the last few years, they haven't been in agreement. Both parties in Congress, they've been suspending the debt ceiling, basically allowing the U.S. national debt to go over the ceiling and suspending it. So basically putting the trouble aside and just keeping government going, despite the fact that right now U.S. national debt is just under 20 trillion, but the debt ceiling is below that level. And the debt ceiling was suspended a couple of years ago again, but the suspension ran out on the 15th of March this year. And I made a video back then, beware the Ides of March. But the reason nothing's happened and the U.S. government has been able to borrow is because they've used extraordinary measures. They've done some creative accounting. They've moved funds from different places. But now there is a deadline now. And there's an article in the New York Times from June 29th. It says, deadline is set for Congress to raise the debt ceiling. And I read, Congress has until mid-October to raise the statutory borrowing limit, or the United States will risk defaulting on its debt obligations, the Congressional Budget Office said in a report on Thursday. So with all the gridlock going on in Washington, D.C. right now, all the distractions with President Trump, it's looking really, really hard or difficult that something will be done. And don't forget, the debt ceiling was already suspended for almost 2 years until March 15th. So now we're really getting to the crunch. Why is the debt ceiling so important? Well, in terms of the currency markets and also precious metals, I want to show you something here, a chart of the debt ceiling versus gold going back to 2000. And you can see that from 2000 up until basically 2012, 2013, there was very good relationship. The debt ceiling was raised, gold kept going up. It just goes to show, that what we have today, and people ask, so why is gold important? Well, because gold is the other side of the US dollar. And the US dollar right now is a fiat money dollar. It's backed by government debt. So the more the debt rises, the more valuable gold becomes, because you need more gold to back the currency. And if you've got more currency, and I know we're not on a gold standard, but the market in de facto is, but that relationship has kind of been broken. I know gold got a little bit ahead there, but that was when we had that crisis for, in 2011. That's why gold shot up. The U.S. Government's rating was downgraded from AAA by S&P, and gold rallied. And then they solved the problem of the debt ceiling, but it's still there. It's been very, very hard. They've had to suspend it there. As you see, the debt ceiling right now is still at 18 trillion, but the national debt is at 20 trillion. And if they raise it, now they have to raise the debt ceiling. And they've got till mid-October. And if they don't, then the U.S. government will default, and we could have another major crisis where the U.S. government gets downgraded again. But if we raise the debt ceiling again, let's say we need to raise it to at least 21, because you're already at 20 trillion. And these debt ceilings only last for a certain period of time. So that's the relationship there. It's been broken in the last few years. Gold really needs to catch up, in my opinion. And what's that also got to do with the euro, for example? Well, I think it has a bit to do with the euro, because the euro is the other major currency. It's not the reserve currency of the world, but it's pretty much the second in line, I would say, even though there's been a lot of calls for the euro to collapse. And yesterday we had the ECB meeting, and this is the headline that came out. Euro hits new highs despite dovish signals from ECB. So, yeah, the market saw the comments of Mario Draghi after the ECB policy meeting as being dovish. He didn't, really change. Apparently, he said nothing's changed since my last comment about withdrawing accommodation. Even though the market saw the outcome of the meeting as dovish, the euro actually rallied really strongly. And right now the euro is trading at 116.65. That's up 1/3%. And looking at the technical picture, the euro is actually breaking, it's breaking the high of last year, which was at 116.16. So we're breaking through that level, and now the next technical level is 117, which was the high in 2015. And then we have to go, and then we'll be very near the 120 level. That, as you can see in this chart, is a really, really important level. So I remember, I think it was end of 2015, beginning of 2016, talking to someone, and the euro was, around 105. There's a lot of talk, euro is going to parity against the dollar. But actually, no, now we're going back up. So key levels to keep an eye on, basically 117 now in the euro, and then 120. I think if we're able to close above 116 this week, that will be very bullish for the euro, negative for the dollar. What else? Precious metals are continuing to do well this morning. And gold right now making a new high for the week. 1248.50 is the high this morning so far. It's about 8:20 a.m. London time. Right now we're at 1248, up only 3.5, but we're moving higher gradually. Silver 1640, up 6. The high is 1641. Stock markets are basically unchanged. And dollar index right now, 94.06. So a new low in the dollar index for the year, and basically being driven by the strength of the euro. Gonna look at a few charts right now. Let's look at gold. And I've got some interesting charts for gold. First of all, let's look at that trend line that we've been talking about. Well, I've been talking about for the last few months, even last year. It's that long-term trend line. As you can see on the weekly chart, we're back above that now. Yeah, so that's looking pretty good. That's like a flag there. That looks pretty interesting as well. And I'll show you another chart. You can see that flag a lot better. 1 second here. Yeah, so that's the bull market in gold that started, in the early 2000s. We had the big top in 2011, and basically this flag is like a consolidation of a long-term cyclical bull market in gold. And as you can see, that chart as well, a weekly one, has gold above that trend line right now. So we're breaking out of that falling pennant, basically, which is a bullish continuation, formation. I know it's a very long-term one, but it's a very long-term bull market. The fundamentals haven't changed. We have even more debt than we had in the first leg of the bull market. So that's why I expect gold to, I've made videos before that gold will be, resuming the second leg of the bull market. When it is, not too sure exactly, but I think we're a lot nearer to that point right now. To those who think gold is going to go to 700, the only way that would happen would be if central banks really stopped, their normal policy of printing money. Then we'd have a deflationary collapse. Gold could go to 700, but so could the Dow go to 700 or 1,000. So it's all relative. And I want to zoom that chart just to show you that we are above that trend line right now. But you can see that trend line, there's a fight there to keep the gold price below that level. I think the people who manage the price of gold know that gold will eventually, explode higher because of the debt problem, but they're just trying to extend the system, extend, the status quo for as long as possible. It looks like they're having a tough time doing it. In the end of the day, paper gold is not real gold, and physical gold has been moving east, and people, it's becoming scarcer and scarcer. I know the amount of gold existent is still, is a huge amount, but it's not available, the physical gold, and the paper gold is highly leveraged. What else? Yeah, that's it. So very interesting times. I think we need to keep an ear out for now the debt ceiling situation. I know there's a lot of distractions out there, political, but to do with President Trump. But keep an eye on the euro. Of course, gold, and anything that comes out about the debt ceiling. So as I leave here, it's 8:22, and gold is 12.48, silver 16.40. If you enjoyed this video, like, share it, subscribe to my channel if you haven't yet. And watch me on steemit.com as well, steemit.com. And if you'd like to make a donation to the channel as well, there's some links below in the description. I'll talk to you later. Bye.